Okay, welcome back. That headline from Bharti, of course, is on tariffs and, much awaited. Everybody's waiting. It's kind of, and when everybody's, I mean, Reema, you would not notice, how much you pay, by the way? You don't know. I can bet you don't know.
I do know. Yeah. I know the last digit.
How much? Tell me.
589.
Point what?
00.
All right, I want to check and come back whether that is an accurate number or not. But I think the point is, since it is so widely advertised and expected, how much of this is in the price? I think that is the other question, right? I mean, if you know it's going to happen in a month and a half, 2 months' time, are people already sort of betting? And of course, there'll be, I think, a reaction once it actually happens, because it's been people have been waiting for a long time. So there is that element as well. So let's ask someone who's kind of sort of also tracked this space, who's I think owned some of these stocks earlier. Sanjay Parekh is founder and CIO at Sohum Asset Managers. Sanjay, great to have you with us here. Good afternoon. Thank you very much for your time. I mean, you heard the Bharti management there saying the tariff levels in India are at absurdly low levels. Substantial repair in tariffs is needed. So kind of giving credence to this expectation that, there are substantial revisions coming very soon. Your thoughts and, would stocks do well once this actually comes through? I mean, the two listed pure play telecom names, Bharti and Idea.
Yeah, so on Bharti, clearly, structurally, they're absolutely a top-class management. Top-class execution. They're gaining market share. They are focusing on quality customers. As they stated, the capex is going to taper down, and they would be towards free cash flow generation. And of course, you need tariff hikes. Now, obviously, there'll be overall ARPUs will go up because of the mix going better. And of course, as they move also to postpaid. And within that, they also have further quality customers. And then there's a tariff increase. So it will be a combination of all of them. And then they're absolutely navigating it very, very well. And consolidation is here. I mean, you still would have three players: Vodafone, Idea, and Bharti and Reliance. There is enough scope for them to move up in terms of growth on a 3 to 5 year basis. And definitely they were right. They're clearly leaders. So that's where we are very positive. We own it. Having said that, as you also said, it's run up. It could consolidate. It's not as cheap now if you look from a near-term angle. But again, if you look from a 3 to 5 year angle, or even if you look at 26, 27, what will happen is, today they were not generating meaningful free cash flow. But if you take cash profit on India and then reduce the capex, which is maybe 25,000 crores, the free cash generation will really be high getting into 26 and 27. And that's where, you look towards these companies on FCF yield, they look reasonable. So the longer term, we are very positive. Near term, I think it will consolidate.
I can see you're overweight on telecom in the India Opportunities Fund too. Sanjay, hi. Your fact sheet as of 31st of March shows the cash holding is 4.5%. As of 30th of April, the cash holding has gone up to 7.5%.
Yes.
You've turned cautious on the markets, upping your cash levels. What does it stand at now? And what is it that you were anticipating when you decided to increase the cash balance?
Yeah, so we actually valuations, discomfort on valuation, profit booking in our holding as well, trimming down where we thought there were excesses has led to that. In fact, our cash has further gone up to 9%. But structurally, we are very positive and we believe that there will be continuity of the current government. We don't know the exact numbers, but we broadly are at least, whatever elementary checks we have is that there will be a continuity, which will augur very well for, equities. So, but having said that, value even in larger caps is limited in selective pockets if you take from a 12-month angle. So that's where we think that it's better to trim down and increase the cash holdings. That's our stand.
And where is it that you've reduced your holding to increase this cash level?
Sorry?
No, I'm saying where is it that you've, booked profits?
Yes. So we book profits in certain segments in utilities. In our core holdings also, when the weight was very high, we thought that, there is some money. I mean, values in certain cases, I mean, the prices are far ahead of values for 26 as well. So, while we don't trade in and trade out, but it always makes sense to trim down your exposure. So in case there is any reaction, or if there are better opportunities, you can always redeploy to better, in terms of better opportunity. That's what we have done.
Pretty interesting, Sanjay. Interesting thought process there. Now, where does capital goods fit into your scheme of things in this context? The reason I ask is that it's a sizable exposure for you. It's an overweight compared to the benchmark index, and of course, right now you'll be feeling absolutely delighted with the way these capital goods stocks are behaving, right? But what do you make of things? I mean, these are historic margins that some of these companies like Siemens, ABB that they've delivered. Do you see this sustaining? Because by nature, it's very lumpy. I mean, tomorrow, if there's a bad quarter, then are these stocks susceptible to a sharp sell-off because of the rally?
Yeah, so you're right. So basically, as you mentioned just some time back in terms of valuation, so we are very cognizant of valuation. I mean, they're great businesses, but you will have to buy them at great price. So overall portfolio price earning of our overall portfolio is 15 times on 26 for growth rate of 20%. And that we are very conscious of not overpaying for a great company. So these companies like Siemens and ABB, yes, they're great companies, and yes, we miss them buying way down, but we would not want to chase at current level. Having said that, we genuinely believe the opportunity is very, very large. The entire domestic theme, so capital goods, cement, you can play through logistics, which we have done through ports. Cement can be a proxy. Capital goods directly also, we have Larsen & Toubro and one of the companies in solar space and one of them in EPC space, which is very high quality in terms of ROEs. So we've invested where we thought it was reasonable, and we like the opportunity. Even in the current government which comes ahead, the first thing they'll do is, again, accelerate the infrastructure space, because that would mean economic development, employment generation, and growth. So it's very logical to happen, and wherever companies are rightly positioned, we will be there, and we are further looking to accelerate if we get a right valuation.
No, absolutely. Sanjay, Solar Wilson is what you're referring to. That's a recent addition, or you've owned it for a while?
Yes. No, we bought it, Prashant, 3 months back, and it's significantly run up almost 60-70% for us. So we're holding it because the opportunity is very large. They've come out of the debt problems.
Yeah.
They're almost now sitting on net cash. They have delivered good fourth quarter, but the best could be in 25 and 26. Having said that, it's run up too fast, and I would suggest
what a P is at, Sanjay? FY 25-26?
Right, so I'll tell you broadly, they'll do an EBITDA of around 500 to 550 crores. But now the market cap is pretty significantly gone up at 19,000 crores. And then, the only good point is in this company is it's come out of the crisis. It is sitting on good order book. The opportunity is very large. The parent now, Reliance support is very important from a debt angle, the comfort to the lenders. And even if they execute seamlessly, it's a negative working capital company. There's no capex requirement. So you just have to execute it right, profitably, at 7 to 10% margins where you get your orders from. And it could be meaningful turnaround and high returns. That's the outlook we have. As I said, having said that, it's run up too fast, and I think it's now not cheap. That's our view. But we'll hold on as a core holding for us.
No, absolutely. Sanjay, great conversation as always. Thank you very much for your time, and appreciate it very much here. So that's Solar Wilson. As Sanjay said, Reliance, of course, is a significant shareholder in the company, and the support through some of them, Sterling and Solar Wilson kind of repaying the debt and coming through all of that has been critical. That backstop has been critical. We'll take a quick commercial break here. We'll come back, D Street Chatter with Nimesh